Simon, how bad is it for global bonds, and what does this mean for issuance that we're looking forward to in September?
Oh, hi, Matt. So we had Powell on Friday. He, as expected, he renewed the Fed's hawkish vows. Kind of interestingly enough, you know, the longer-term government bond yields didn't really do a lot. And that's kind of been the way things have been going. Like short-term yields rose because he was hawkish. But if you look at things like the real yield curve and the yield curve, it's not really been transmitted along to longer-term yields. And that's really because the expectations are such that, you know, the Fed is going to have to start cutting probably much sooner than people expect. I don't think that's the case, but that's kind of what the market is pricing right now. But when it comes to the global aggregate index you mentioned, you know, that's corporate bonds as well. And I think that's still where maybe the penny hasn't quite dropped yet, because not only do they are impacted by the yields as they are today and how hawkish the Fed is, they're also impacted by the lagged effects of leverage taken on. And through the pandemic, we saw a huge amount of leverage taken on board, and that has yet to feed through into the corporate debt.
So do you think the bond markets then still have a misplaced faith in a Fed pivot?
Yeah, I think that's very kind of optimistic. I think if the Fed is going to pivot, it's probably not going to happen exactly as the market thinks, certainly when it thinks it's going to happen. So I think it is misplaced still, yeah.